Hey, Rebel Bankers, this is your host, Chris Noggle, and welcome back to the Real Estate Money School. So today I'm here with a really special guest. I was just on his podcast, Income Hackers podcast, and we're not going to just talk about his podcast. We're going to talk about Ryan Wright's Do Hard Money. You know, this is a show all about money and real estate, and man, are we going to hit that on the head today. So Ryan, welcome to the show, man.
Hey, thanks for having me. Excited.
Absolutely. So before we get into Ryan's background, why, he is the do hard money guy and the income hacker guy, let's talk a little bit about each of you. Let's talk about your journey to becoming a rebel banker. So each of you are on a journey at one point or another. Some of you might just be starting. Some of you might be seasoned real estate pros, but we all have to realize the only way we're going to get ahead, the only way our businesses are going to scale, and the only way you're ever going to achieve the goals you want is to get started right now. And that's what you guys got to do. You got to take that leap. And that leap sometimes is simple as grabbing a copy of a book like The Private Money Guide or Mapping Out the Millionaire Mystery and starting. Because knowledge is power, but you know what's funny? I always say this. I always say financial knowledge, that's the real power. So with that being said, you guys get started to be your journey to becoming rebel bankers. And let's do that right now with Ryan Wright. Ryan, tell them about your business. I know we talked a little bit about it, but tell my audience a little bit about what it is you're doing, how you're doing it. And then let's go back in time.
Well, I'm really just on a mission to help anybody that has the desire and is willing to put in the work to find success in, alternative investments, making money. I'm really fortunate. I had a guy named Dan who lent me money when I did my first project that nobody else would. And that guy changed my life. And put the trajectory of my life completely different than where it would have been. And I'm just really grateful for that. And so I just have the same philosophies of hard money lending, which hard money is lending on the hard asset, not the soft assets, and giving people chances if they're willing to put in the hard work to make it happen. So I look at ourselves as providing the pathway to get from where you're at to where you want to go.
Awesome. So but specifically, what do you guys do? If someone was trying to, seek you guys out and really use what your company does, give them a little bit more on what you do. I know we talked a lot about what you've created and how you're doing it. So let's get down in the weeds a little bit on that.
Yeah, let's do it. So for most people, what we start out with is what we call a financial forecast. And then we do what's called a next deal blueprint. So we basically map out and reverse engineer as to getting that first deal done. So you've got to find the property, and just calling an agent and hoping that works is not the way to find properties. So you've got to either do direct marketing, or you've got to knock on doors, or you have to find distress and equity and match those two together. So we have multiple different strategies on how to do that, from voice broadcast to door knocking to sending postcards to whatever you want to do. So we map that in, and then we decide how many you actually need to do, what those conversion rates are on a national level, so you have a good idea. So it really says, hey, if you want to spend money, and it's money or time. If you spend money, you can get there faster because you can make the whole thing, the journey, happen faster. Or you got to put in your sweat equity, knock on doors, do that type of stuff. That's going to take longer. But either way, or a combination of both, either way, we map out what you need to do each week, and then you have your homework assignments as to what needs to happen each week. So that's kind of where it starts. Then from there, as you find a deal, we have what's called the advanced deal analysis, where you can plug that deal in and make a determination if it's a good deal or not. And that also gives you what funding options would be available on that specific deal. From there, we have the Investor's Edge software, where you can pull all your comps. You have access to MLS. You have access to tax records without being a real estate agent or needing board or any of that type of stuff. So you can find out what it's worth. And then we have access to contractor databases, where you can make the determination what costs should be for your area based upon local costs. And then we have capital. So we have capitals, project managers, and those things. So we kind of make it so the journey can be as easy as possible. I mean, real estate investing is simple, but it's not easy. The process, buy it, fix it, make money. Anybody can do that. But there's a lot of intricacies that make or break a deal.
So it's almost like start to finish. So from finding the deal to getting the deal funded is kind of how you're helping people. And, I think that's a mystery. I mean, I'm mostly dealing with people and helping them learn how money really works and finding that way to building their bank and building, their bank of private lenders. So, you control lots of money that could be lent out to different investors that have good deals. But I think the big misconception is a lot of people, when they get a deal, they think, oh my God, I got a deal, I got a deal, I got a deal. They take it to the lender, the hard money lender, and the lender's like, this isn't really a very good deal. We're not interested. So where is that, how do you bridge that gap between somebody getting super excited? Maybe it's somebody that's new to this business, right? They got this deal. They're just getting started. They think they got a great deal. Their realtor brought it to them. Then they're super pumped. They're ready to get started because you remember that excitement,
Absolutely.
right? That first deal, it's just the most magical thing. And it all starts with when you got the deal. But then all of a sudden you think you got the best deal and you're going to be able to get money, and you send it away, and all of a sudden you kind of, your balloon gets deflated when you hear, oh, this isn't really a deal that we would do, bring us the next one. Good luck next time. So like, what advice can you give to the newer investors?
Yeah, it is super, super deflating, where you think you've got something. I think the first step comes with education. You don't want to get excited about the first deal that goes under contract, because that first deal is probably not going to work out. I mean, it might, but most of the time you're going to make multiple offers. And I think that's a misnomer. I think a lot of new investors just think if I can just get a deal under contract, then I'm going to make money as an investor. It's not about getting deals under contract. It's about getting the right deals under contract. And that usually takes a lot of offers. I mean, we have some people that make 20 or 30 offers before they get that right deal. We have some people make 50 offers. Some people doing direct marketing only need to make 3 to 5 offers, but they really have a turnkey system. They know what they're doing with that. So I think the number one thing is education. And the education that I think starts is knowing how to value properties. Knowing what a property is really going to sell for. And a lot of people delegate their success to an agent on this. And I think that's a mistake. I think you've got to learn how to value properties. And if you have access to the MLS, and you have access to the tax records and the mapping systems and those types of things, and you can look at and get some training and some education on that, then you can get really competent on valuing properties. I think a lot of people get a little bit confused because there's an art and a science to valuing the properties, but you can come up with a range and have a really good idea. If you do that, and if you determine what the repair costs are really going to be, because the two things that we're saying this isn't a good deal to has to do with values and has to do with the scope of work or cost. So if you can really dial in what it's going to cost and what scope needs to be done, and you can really dial in what that property's worth, that is 90% of the battle. If you can find the property and have the right value and have a good contractor and know the work, that's 90% of the problem right there. Then you've got more than likely a fundable deal, because then we're looking at it saying, is everything they're giving us accurate? If so, let's do this. And then it comes to the project management. You were just talking about contractors before we started the show. Managing those contractors is a beast in and of itself, in making sure that's successful and getting the property resold.
This is how I feel about contractors. Every time I get their quotes or I start working with them, that's me every time. So I totally agree. And one thing you said in there that I loved, that I really honed in on is, a lot of newer investors are taking all their advice and getting all their advice from realtors. Now, I'm not saying anything bad about realtors, but, they're in the business usually of retail. Selling homes to a retail buyer that's willing to pay the full price. Now, so realtors a lot of times will think that just because it says foreclosure, that it's a good deal because, oh, this is a bank foreclosure. It must be a good deal. But the banks, and you can kind of second this, but I think the banks have figured that game out, and the banks are getting almost retail because they're playing into that mindset and that I want to call it that speculation that just because it's a foreclosure or just because it's a bank deal, it must be a good deal. And most the bank deals I'm seeing are garbage, way overpriced garbage that there's no way in a million years someone's going to make money. So I hope you plan on moving into it. What is your take on what's happening in the markets right now with realtors, with banks, and this game that's kind of going on right now with bank pricing?
Yeah, I totally agree with you. It's just supply and demand, right? So there's not a lot of supply of inventory on the market. So obviously, whether it's a bank price or anybody else's price, it's going to be there. I really think with most bank deals, you're buying it maybe 5 or 10% below retail. And that gets really confusing for newer real estate investors, because it may look like a good deal because everything else is going for 150 and this is going for 130. But the reality is it needs 20 grand worth of work, or it needs, it's going for 120, it needs 20 grand. You're going to have $10,000 equity when you're done. And that's if you do most of the work yourself. So, but in this marketplace, there's enough buyers that are willing to do that and are excited to get that 10% equity that it's worth doing. But as a real estate investor, 10% equity ain't going to pay the bills. So you've got to be prepared for that when it comes to real estate investor. And that's where it really comes down to finding equity and motivation. So you've got to find a property that has the equity, and there's a reason why they have motivation. And in lots of places, that's something where you need to do add value to the property to increase the value as well. So I think so. And talking about agents, just to touch on that just for a minute, I don't think the majority of real estate agents don't know how to value properties. It's kind of this misnomer. Like when you go to real estate school, they don't teach you how to value properties. They don't teach you how to they give you the legal right to fill out the contract, right? That's really what the real estate agent, and this isn't downplaying. I've been an agent for 20 years or 18 years or something like that. My wife's a real estate broker. There is huge value in agency. I totally believe in it. I've hired agents for myself to do commercial properties, like that type of stuff. This isn't a discount, but the majority of agents close like one deal a year. The average, the median's like a couple of deals a year, which basically means you've got a bunch of guys doing 100 deals, and then you've got a whole bunch doing nothing, and you've got a few doing a few deals. But the idea is learning how to do comps comes from experience. And learning how to do comps comes from doing some research. And so I think that's something you can't delegate. You might want to get an opinion, but it's something you've got to learn if you want to long-term be in the real estate game, either doing BRRRRs or fix and flip or wholesales or whatever, rentals, whatever you're trying to do. You've got to learn how to value that and get comfortable with those values. You'll not always be right. No one will be right. The property will never sell for exactly what you thought. It might sell a little more, might sell a little less, might be a lot more or a lot less, but getting in a range where you feel comfortable.
Yeah. And, I was thinking like when we started this, we were going to kind of talk about your past, your first deal, but I'm liking where this is going. Let's just keep talking about this stuff because, one of the big things I always talk to our students about and all the people that, I'm in communication with is I always tell them the money in real estate is made on the buy. If you can't get the buy part right, you can't make money. But not only like that, I'll take that one step further. If you don't buy a property right, you're not going to make money. But not only that, if you don't buy a property right, you are not going to get money for your deal, or you're going to be so blinded or we talked about deflating the balloon when you get the amount that the lender's willing to give you on your deal. Because if you didn't buy it right, remember what are hard money lenders? They're lending on the hard asset. Hard money lenders aren't called hard money lenders because they're hard to get money from. They're actually very easy to get money from. However, they want that asset, the hard asset, to be what they're lending on. So if you don't find the right deal, if you kind of talk what we were just talking about with realtors, that is, I think, one of the hardest things about this business is getting lucrative off-market deals that are valued right. And it's getting harder, folks. So like how are you finding deals? How are you seeing investors finding those juicy, lucrative deals? Because I know everybody I'm talking to is saying it's getting tight, it's getting tough, but there's still deals to be had.
Oh yeah, there's always deals to be had. And I think that's one of the things, as we talk about the new investors, before I tackle the finding, the marginal deals, an experienced investor can probably make money on a marginal deal because they're going to put a lot of money down, or they may pay cash for it and they don't have financing costs, and so they'll make money by not having all the costs that a new investor has. And so lots of times a newer investor will see a marginal deal and see somebody pick it up and be like, oh, they made some money on it. And they may have if they paid cash for it or didn't have these other costs. But if you're new especially and you don't have your own cash, then those marginal deals just don't work. You just can't make them. So you have to find an even better deal than some of the experienced investors are finding. And so you got to work a lot harder on that. So what we use a few things. So we have a software called the Investor's Edge software, and it helps us map out and know where the opportunities are. So we have heat maps that let us know where the price ranges are and where the opportunities. So we like to say for properties that are under $500,000 on the fix and flip once we're done. So purchase price under about $250,000. We want to be in areas that are kind of blue collar neighborhoods. So we don't want to be in the most expensive, but we don't want to be in the war zones either. And then what we can do is we can do some searches. So we can look and say who's going into bankruptcy, who's in foreclosure, who's got going through a divorce, who's an out-of-state owner, who's a non-owner occupied, who's got involuntary liens on the property. So we can take that list and then we can match a list with that against people that have equity. So we do what's called a reverse amortization. So we determine what the note was, and then we can reverse am it based upon what interest rates were when they took out the loan. And then we can compare that against what's called an AVM. It's an automated value management system. And then we can compare the two against each other and say, hey, does this have at least 50,000 of equity? And do they fit one of these criteria, divorce, out-of-state owner, whatever the case is? And if they hit both those boxes and geography works because they're in the right geography where we want them, then we have someone that we need to go over. And the more boxes they hit, the better the lead that they would, or prospect, I should say, they would be. So then we've got a hit list, and then we can either go knock on the door, we can send postcards, we can do a voice broadcast, we can send text message, we can put even a website together with our software as well, where when you send the postcard or do the broadcast, you can say, go to this website. And so then it's just a matter of making deals happen. Because if you've got a property that's in disrepair, or you're going through a divorce, or whatever the case is, and you can't sell your property retail, then you're going to have to sell it to an investor. So if you're going after properties that are in great condition, no need. If somebody's going through a divorce, the property's in great condition, they're going to list it with an agent anyway. But if you've got a property that has a zoning violation, which I forgot to talk about, or you've got something that's got a property violation, one of my best tips is going after things that have those violations with the city violations. The weeds are too tall. The tenant did this, and going to like the zoning court or the city violation court with properties and handing out business cards and saying, hey, I'll take it off your hands. Even my own mother, she sold her property to an investor, not me, because she had some tenants that trashed the whole thing. She got so sick of it. They hit her with the postcard at the right time. She called them up. They gave them a decent offer. And she's like, yeah, take it. I'll take the tax write-off and move on with my life. Because they emotionally, most people aren't fit to be landlords. And so for rent by owners is a great way. I love to call for rent by owners and say, hey, are you interested in selling? They always answer their phone. If they don't, they may own another property. If not, I send them something, say, call me when you get desperate or when you're not happy with it. There's lots of ways to do it. It's just simply a numbers game. You've got to hit so many people in order to get the success. And when things get tight, you have to hit more people. And when things get easier, you have to hit less people. But it's always a numbers game.
You know what I liked about what you said is you talked a lot about the relationship factor, right? Your mom who had this house and tenants trashed it and she just couldn't deal with it. And, it was the right timing, one, but it was a relationship. So if somebody goes down to the violation court, where all these people that have been getting fined for their property, one reason or the other, or maybe they're out of state, that's great. I mean, a lot of the deals we get come in similar fashion to that. So many people are spending all this money on direct mail, and that stuff works, but it's the law of numbers. If you really don't have the money to spend on big marketing campaigns, the only other thing you can do is invest your time. Go out there, make relationships, build relationships with estate brokers, estate attorneys, probate attorneys, divorce attorneys. When there's a divorce, do you really think they want to sell that house sometimes? Because neither one of them can make a decision as to who's getting the house. They're just like, screw it, I'm selling it. If you're the first one waiting, being like, I'll buy it, I got cash, they might just say, here, get it out of our hair. They don't care. You play into the emotion, but it's that relationship too, because you got to be the right person. So it just goes so far. And also the relationship way of building this business is the one that keeps paying you dividends over and over. Once you build the relationship, it keeps paying you.
And with a relationship, you have to be patient.
Yeah.
That's a thing that I think a lot of people forget. Once you make the relationship, you have to cultivate it. And even if it's like an estate sale, which is another one of my favorites, the house is free and clear. Kids are all over the country. They come in, they don't know what they're going to do. Lots of times they don't have to sell that house. But if they took $30,000 less and each kid got $10,000 less, but they didn't have to deal with a hassle or the fix up. Lots of times there may be a mortgage. Maybe there's a small mortgage for $50,000. Nobody wants to pay the bills. So, what do we do? Split it up. Let's get rid of this property so we don't have to and we can cash out. I think the idea is people are willing to sell at a discount if they get something out of it. So if I can help solve their problem. So I'll give you another example. I bought a property from a guy that had to go into a retirement home. But the problem was he had to go to a retirement home now. And they didn't have the money to put him in a retirement home, but he had money in the house. The house was in disrepair, but they needed it right away. I was able to buy the house for a reasonable price that I could fix it up and sell it. They took a reasonable discount because they knew the property needed it, because they needed speed, and they got the money a week later, and grandpa was able to go into the retirement home. They were praising our name. They were so happy and ecstatic because I helped solve their problem. Could have they gotten more money for the property? Yes, they could have, and they knew that. The only way they get more money for the property is to drop a whole bunch of more money in that nobody wanted to, take time to do the repairs, which nobody wanted to, manage the contractors, which nobody wanted to, get it back on the market, stage the house, wait for a buyer, wait for them to get financing, which nobody wanted to, and grandpa needed to get in the house. There's a value exchange here. They needed something they didn't have. They were willing to pay for that in the form of a discounted price on the property. I had the opportunity. I was able to solve their problem. Grandpa's in the rest home, and everybody's thrilled. Those are great situations. So when we're looking at properties, the concept isn't just like, how can I get every little dime out of every property? It's like, what is your problem? And if you have equity and motivation, I can probably help you solve whatever problem you're dealing with. And I look at it as real estate problem solving.
That's great. So we talked a lot about like the relationships, finding the deals. Now let's talk about money. So a lot of people have no idea how to present their deal to a lender or to a hard money lender for that matter. I mean, we were talking earlier about, our product, the perfect loan proposal. It's literally exactly that. It's the perfect loan proposal. It's how every deal should be submit to lenders. But not everybody that's watching this is going to know what that is or have access to that. So let's just break down to them what you as a lender would be looking for from somebody's deal. Like if they bring you the deal, let's just assume they got themselves a good deal. They went down and took your advice and sat there in violation court, found that woman who just can't stand being a landlord, somebody just broke all the windows and she's done. They get that deal. And then they come to you with their deal. Most people have the contract, maybe some photos, on their phone and say, oh, check this deal out. Can I get money? What do you want to see? Well,
I want to see him get access to your perfect loan proposal. That's what I want.
So I know exactly, but
no,
not everybody.
I'm serious about that. I mean, the idea with you guys have really done a great job with this perfect loan proposal because it's like, hey, do all the heavy lifting for the lender so they can make the decision easy. One of the things I don't think a lot of people realize is how you present a deal to me tells me a lot about you. So if you've got all your T's crossed and your I's dotted and you've got it all together and you've made it super simple for me and it's like boom, 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 I'm looking at it saying, this guy's got his crap together. You know what I mean? Like it just, all of a sudden you go from just like, hey, here's an address to saying, here's everything. I've already done my research. I'm ready to rock and roll with this thing. I mean, I don't have everything you guys have memorized, but you've got the pictures and you've got the comps that you've pulled to say, this is what I think that's worth. You've got your, pro forma or whatever you want to call it. That's a breakdown of the deal. You've got your exit strategy, those types of things. That's golden. And I'm leaving out several things. But when you have a package like that and you give that to a lender, you are 12 steps above anybody else. And the other thing you've got to realize is when there's a marginal situation like, oh, there's this, what do we do? There's some things that are just no-go. It's in a war zone and someone died across the street or something. It's like, we're not going to do that. But when it's maybe marginal and a decision has to be made where it's not clear cut, when you come to me with a perfect loan proposal type idea where you're like ready to rock and roll, I'm like, let's give this guy a shot, So I think it's going to give you opportunities that you wouldn't otherwise have as you package that. So, I mean, to directly answer your question for us, we have a loan application that you do where you answer questions and then we get it valued and do everything else like that. But there's a lot more that could be done. I want to know about you. One of the things that I think a lot of people don't realize, yes, we're lending based upon the asset, and yes, we're lending based upon the property, but there's a person involved, and that's a big deal. Yes. So who that person is tells a lot about who it is, because I'm also not just betting on the property. The property is my plan B. My plan A is you. And I'm betting that you'll do what you said you would and get the property done and resell, because I don't want the property and I don't want to take the property back and I don't want that risk. So if you can tell me about you, and even if you don't have experience, if this is your first deal, tell me stuff about you. Like, hey, you were on the sports team in high school and you took state and you were first in class with this and you work for whatever, you work for Wells Fargo and you know what I mean? Like, give me some background on you, because if I can see a track record of somebody that wants to, that's out there making the world spin around, I obviously feel a lot better about that.
Man, you couldn't have said that any better. I mean, literally, like the perfect loan proposal is exactly what it sounds like. It's everything a lender could ever dream. It's a wet dream for a lender, a bank, a private lender, a hard money lender. Literally, like you hand that to them, you present it to them, they're going to be like, holy shit, guys, like, let's really look at this thing because this guy knows what he's doing. Instant credibility. But like back to what you said, you guys are looking at the person. You know, you want to know, like, who are we lending to? Yes, the asset's important, but like, are you going to pay? Why should I believe you're going to pay? Show me you. And that's really what it comes down to. Like, you want to get good at this money game, get good at you, get good at making you on paper so that somebody's going to know and feel comfortable to lend to you on your deals. Because you got to get good at finding deals. Obviously, we know that. No deal, no money. No deal, no money is going to be made. I mean, that's just how it goes. But you also have to get good at how you present your deals so that you are a step above everybody else, or so that they know, the lenders, you know, the Ryans of the world know that you are somebody that they should be lending to. Don't ask people for money. When you get good at this, you won't ever need to ask for money. You'll literally have money coming to you because you'll be a magnet. But that takes a little bit of time, takes a little bit of credibility. And that's kind of what you were just saying. I love it. I love it. What else?
And you can't get blood out of a turnip.
No, that's
right. If it's a bad deal, it's a bad deal. That's just, and you've got to get comfortable with that. So one of the things we talk about all the time is don't fall in love with a deal. And we're on your team. Like, look at us as your defensive back. Like, we're there if everything else breaks down. You know, we're the last line of defense. We're your safety, you know, type idea. We want to say yes to every deal. Don't get me wrong. Like, that's how we make our money. Saying no sucks. But unfortunately, we say no a lot. Well, let me rephrase. We're not saying no. We're just saying we can't make that deal, but we could lend you $75,000, but not $85,000. This is what we could do to make this still work. Well, there's not a lot of deals we have to say no to unless it's like, you know, someone got shot across the street or something like that. So, yeah. And I can't agree with you more with what you said earlier. I agree. You make money when you buy and you realize it when you sell it. So, you know, you can never do work or restructure the deal that you bought wrong to make money on. And the work that you do, but you can definitely screw up a good deal, right? So you can screw it up through fulfilling it and not doing the right job or getting it done or spending too much. But if you buy it good enough, it can help cover a lot of those sins as well. And especially as we're talking with new investors, like getting that deeply discounted property by helping solve somebody else's problem is how you're going to get the success that you're looking for. And then playing the numbers game, whether it is knocking on doors or whether it is going to city defaults or whether it is, you know, whatever it's doing. I mean, I've got a really good buddy of mine that just moved and he's working foreclosures and he's already done 15 or 20 deals this year just by simply knocking on doors of people that are notice of sale in the evenings 3 days a week, saying, hey, I can help solve your problem. What can we do here? Gaining some trust. And at that point, they're really like, I have to do something because the sale is happening in 2 weeks. And he's
knocking on their door. He's knocking on their door. He's there trying to help them make and build that relationship. So it's different than just getting a call. Everybody sits in an office or a basement or their bedroom, whatever you want to do, and they pound the phone and they call. But that's not the same as knocking on a door. When you knock on a door and tell them you really want to help them, like sometimes people can't help but to say, well, maybe this is what I've been asking for. Yeah. Maybe this is what I've been praying about. And literally, like, you have to understand, you'll never know what that person's going through. And all you need to do is figure that out and solve that problem. And boom, the rest takes care of itself.
Absolutely.
So another thing too, almost like, you know, I don't know, my wife is really into Jeopardy and there's always Final Jeopardy. So let's do a round of Final Jeopardy and let's talk about like your thoughts on the market conditions and maybe what's to come. We're in 2020. Okay, we were coming off of, you know, 2008 was a long time ago, almost 11 plus years ago. And here we are in an election year, lots of things going on. What are you thinking is going to happen? Like, what is your feeling about market sentiment? What is your feeling about what that's going to mean for real estate deals? And what do you feel that's going to mean for the hard money lending space?
Yeah. So, I mean, nobody's got a crystal ball, right? So this is all speculation. But my thing is, I think the market's super high. The interesting thing is I thought the market's been super high for like 5 years and it keeps getting higher. So I think one of the things I personally made as a mistake is I didn't continue to buy. I think the idea with real estate is you always should be buying real estate. And so if you're always buying it and you're buying it, then you do what's called dollar cost averaging. So that if you're buying and keeping properties, you may be into some too much, but you're into some really low. And so your overall is there. But it's really hard to time the market and know when the market's just going to be ideal. I remember in 2008, after 2009, when the crash happened, I was scared to buy real estate then because I thought it was going to get even worse. And so I've always tried to time the markets, and I think that's really, really hard to do. I wish I would have bought 100 houses in 2009, and I wish I would have just kept buying. So I think one of the great strategies, and it depends on what you're trying to do. If you're looking for cash flow, I'm talking cash flow. If I'm looking for cash flow, I wish I would have just bought a few properties every single year and dollar cost average into them rather than trying to just buy in the perfect times. I would love to see a market correction. I would love to see that. I don't think we're going to see it this year. I think the market's going to continue to be strong, and I think we'll prop it up with a shoestring if we need to for an election. I think that's typically what happens.
Gotta happen. Always does.
It always does. Yeah. So, and then the question is what's going to happen next year?
Yes.
I mean, I don't want to get political or anything, but I think a lot of people, think the current regime is doing a great job or a horrible job, but a lot of it, I think, has to do with the economic policies that were put in place prior to, that's like, hey, you can't change a lot. It's happened. Things are in motion, stay in motion type idea. So I think we'll see a correction. I don't think we'll see it this year. Maybe we'll see it next year or in the year to come. I'm seeing one of the things that always been an indicator for me. I've got a buddy of mine that does land and soil sampling, and they do it for like airports and ski resorts and all this type of stuff in the Western United States. And he's been a great indicator because before 2008, he could have told you the crash was happening, and he did. Because what happened is all of these big, huge commercial projects started pulling the plug. We're not doing it. We're not doing it. We're not doing it because they were scared about the state of the economy, and they were economists and all that type of stuff, and they started pulling the plug. And I think that's really what it comes. If the big dollars are flowing in and continue to flow in, then I think you see the economy stay really stable. If the big dollars aren't flowing in, I think that's where you get into trouble. And I can tell you right now, they're backlogged for a couple of years right now with projects because it starts with the soil. Until the soil tests are done, nothing else can be done, and that's a long, laborious process. And then all the other work starts to happen. So if those guys are busy, money's already been committed and things are going there. So I think we continue to, and I think some people say maybe there's some softening going on. I call it, it's some normalization going on. Like houses selling in 5 days is not normal. Houses with multiple offers is not normal. It should take multiple months to sell a property. You shouldn't have 3 people fighting over a property. The equilibrium is wrong. But the other problem you get into in lots of places is simply a supply and demand. Like in my state where I live, there is not enough houses. That is always going to push prices up. And I was looking at a house just yesterday. I bought houses in this neighborhood for $100,000, and currently they're going for $350,000. And it freaking blows me away that that's possible. And I'm having a hard time being a dinosaur saying, yeah, I'll buy that house for $250,000. I'm like, $250,000 is a ripoff. That thing's a hundy. But you've got to also understand where the times are. So I think it's cautious. Cautious is the right sentiment to have. Looking for the right opportunities. If you're fix and flipping, you're in and out quickly. If you're wholesaling, you're in and out quickly. I'm a little cautious on long-term holds right now just because I think I would like to see some correction, but I've been cautious on that for a few years, and I wish I would have bought more a few years ago.
No, that was well said. I mean, yeah, it is. You can never time the market, and that's part of my game, being an advisor. That's all I did is market patterns. And even today, call me a nerd, but that's what I love studying. I study the history. I study all the market patterns in the past, the history of how it happened, what signs to look for. I'm reading a book right now. And it's funny because I get super excited. I'm going through and I'm studying all these patterns. And I'm like, yep, that just happened November of last year, the inverted yield curve. And then I study how long did it take back in the 80s when that happened for that to actually kick in. And you'll never get the timing right. No. The only thing you can maybe get close to is what you said. You got an election year, which is almost a telltale. You got the death cross, if you will, the inverted yield curve. Now you got an election coming up, which is controversial in a lot of ways. But you do have a raging economy and lots of other good stuff. So it's anyone's ball game. But there's definitely room to be cautious. And I love that you said that. But the other thing, too, we got to wrap soon, but we didn't really talk about the impacts of when the market does. Now, we can't predict when, but when it does decide to start softening and sliding and enter correction zones and recessionary periods, what do you think is going to happen from a money standpoint for people's deals? Because this is a huge thing that I find is a misconception. See, people think that when you get into those periods, money dries up and there's no money out there, which is absolutely the opposite. There's a lot of money in the system right now, but when that happens, money doesn't vanish. Money doesn't just poof, disappear in thin air. When that happens, it changes direction. It goes to a safer place. Hard assets are always going to be one of the safest, best places for money to flow. So, I mean, what do you thought? I'm trying to think how to phrase this question. What are you thinking will happen when we do hit this correction zone for raising capital?
Yeah, I mean, I think the idea is, like you say, the money doesn't go away. It's a retraction, right? I'm going to take it from this and put it in that. So it's a reallocation of where those things are actually going. What I think is really interesting when we talk about, what opportunities will be there, I think you want to position yourself to be able to take advantage of those opportunities when that actually comes. From our vantage point, we're excited about that happening because that will create more opportunities. Like you talked about a little earlier, it's getting tighter to find deals. Well, when that happens, it'll open up the deals. But you're always going to have one of two problems. You're always going to either have a hard time finding deals, or you're going to have a hard time selling deals. It's either going to be easy to find and hard to sell, or hard to find and easy to sell. So you're always going to be balancing one of those two spectrums. So you've got to realize you've got to be able to play both sides. You got to play offense and you got to play defense. So you got to know what to do when it's easy to find and it's hard to sell. How are you going to sell properties, right? Maybe you're going to do seller financing. Maybe you're going to, I don't know. Maybe you're going to do lease options, like put a strategy together. When it's hard to find and easy to sell, it's a whole opposite program. You got to spend the time finding. So you're always going to have a problem. That's why you're an investor. You get paid to solve problems and take on a marginal amount of risks. So I think the opportunity, if you're a long-term hold type guy, the opportunity when a correction happens to double down on things, it makes a lot of sense. And I can tell you, over the history, real estate always goes up. So if you look at prices from where they are, even if we have a correction, when we have a correction is the right thing to say. It will happen. But when we have a correction, between now and 100 years from now, I am certain values will go up. They just will. There's only so much land. There's only so much prime real estate. The values on those continue to go up. So I see that as being a good asset class. The other great thing about real estate or a tangible asset is you have lots of options. You can sell it, you can rent it, you can seller financing. You have lots of options when you're investing, like in a stock or whatever. If the company crashes and burns, that stock turns into nothing. And it used to be you actually got paper. Now it's all digitized. You don't even have paper to light on fire to burn. So you don't even get the pleasure of doing something like that when it comes to a stock investment. The last thing I'll say on this is it depends on what causes the downturn. We saw the dot-com bubble where all these dot-com companies were overvalued, and all of a sudden that happened. It caused it. We saw the real estate quote unquote collapse because we saw basically Wall Street buying paper that they probably shouldn't have been. Some of those things have been corrected. So it's what's going to cause it really becomes the question, because some of those things they've quote unquote fixed. So what's going to cause that? And but in the end, people always need a place to live.
Absolutely. It's always going to be that, because you can't take that away. People need a roof over their head. Their families need a roof over their head. That will never change. So we are all in a good place. This has been great, Ryan. And, if people want to learn more about you, learn more about your programs, or just submit some perfect loan proposals to you guys for funding, how would they go about finding you?
Check us out over at dohardmoney.com, dohardmoney.com. Super easy, just like it sounds. Love to connect there. And if you want to just follow us and stuff, check out Income Hacker. Love to have you join the Income Hacker Club.
Yeah, absolutely. So everybody watching, make sure you check out their podcast. It's really good. I was on it and it's just a great podcast, great format. So make sure you check out Income Hackers. And heck, nobody doesn't need money. That was a terrible way to say that, but you get the
Everybody
drift.
needs money.
Everybody needs some money. So dohardmoney.com, learn what they're doing, submit your deals the proper way, and you just never know. So thanks everybody for joining us for another edition of the Real Estate Money School. And you guys remember, on your journey to becoming a rebel banker, you got to get up and take action. So right now is when that should start. So go out there, make things happen. Look Ryan up, check out his programs, and let's make some money together. Thank you all for joining us. We'll see you in the next one.